Good afternoon, everyone. Welcome to another Precious Metals Update. My name is JR. Today is Tuesday, September 8th, 2015. So today I'll be looking at the gold, silver, and the Dow. I'll be looking at monthly, weekly, and daily time frames. So we'll start off with gold. So I wanted to get this video. This is the end of the month video, right? So I wanted to make this video after the month was over, last month was over, so we can see what type of candle we left off. On my last video, I did mention that I wanted gold to finish off at least above 1130, and that's exactly where we finished off. We finished off at 1133. The reason why I wanted a close above that level is because if we did get that close above that level, then that's basically at half this candle here, which is right about here, 1131, and that would have also generated a nice piercing candle. So this piercing candle is a bullish candle. So based on this chart here, obviously you can try to go long here at around the high 1100s. I'm sorry, high 1090, 1095 area. You can also even go long here at 1150, but this is a bullish candle here, and I do expect prices to test this area here, at least this level here, this zone here, before continuing to go south, or before staying true to this wedge that we have here in play. And if it's the case that the wedge is going to stay in place, then you might see a move come to up here, come to test the height, maybe the mid 1200 range, before coming back down again and retesting this long-term trend. This long-term trend has been established here for quite some time, since the middle of this decade, or in the middle of last decade. And as of now, we want to see if this level is going to hold. It does look like it's going to hold, especially given the equities market. I don't see why that wouldn't hold. All right. I do expect a lot of volatility. And again, this is your zone to keep in mind here. Okay. So you are within this zone. So anytime you are within this zone here, you can buy. So any prices you can buy at this level here, you want to put a stop loss maybe at around 1020, 1015 or something like that. And you definitely want to shoot up all the way here. The lower you're buying in this zone, the better it is for you, or the better the risk to rewards are, right? That's your monthly chart for gold. So the gold monthly looking really nice. The weekly chart doesn't look as positive as the monthly chart. All right, we can see this clear trend here. We have a very big engulfing candle here. This is a very big piercing candle. So you might find some resistance in this area here, all the way between 1150 all the way to 1170. That could serve as resistance. This is your 18-day moving average of highs and lows. And you've heard me say this 1,000 times. On my previous video, I also mentioned that you want to see the move come down. If this is really going to continue its bearish pattern, then you want to see the market go up, right? And create this is your high, another high, and a lower high. So there's your series of lower highs, and your low and your other low, right? So you would want to go below this level here, 1170. Create another low, and again you want to stay above this area here. If you break through this area here, then not necessarily bullish, because really I won't call this bullish until we can surpass this level 1300. If we can go above this level here, then you'd probably be pretty sure that the floor is in, and that this market is going to continue to go higher. Obviously, I do expect a lot of market volatility no matter what happens, right? This is your daily chart. Let's clean this up a bit. All right, in your daily chart, you had a really nice run here, okay? You have your high, you have another high here, and now we want to see if we can surpass this high. If this market is going to continue to go up, it has to do it now. Here's the move we'd like to see above the 18-day moving average of highs and lows. Here's the test of the 18 moving average, and now what you want to see is you want to see a move up. So if you're going to take this level here out, I would say that this level has to hold, and I did say on my previous video that this level has to be broken in order for this market to continue to go down further. So a lot of really conflicting charts. The monthly chart is bullish, the weekly chart is bearish, right? Now when I say bullish, I'm not saying that the monthly chart is bullish. I'm saying that the indicators are suggesting that for now there's further room for upside, right? We're not bullish until we can beat this level here, 1300. Once we can beat this level here, 1310, and stay above that level for for a month or so, that's when you call this bullish, right? The weekly kind of looks bearish, and then your daily. Right now, the daily's trying to make up its mind, right? So you always want the market you always want charts to match up. But as of right now, that's not what we have. So we have one chart going one way, the other chart going another way. I think the daily chart is going to be the deciding factor. Again, if this level here holds, then we could see a move higher than this, and that will probably, that will most likely lead to a move at least to test this area here, the 1240, the 1250 area. Okay, let's look at silver. Okay, silver monthly not looking as bullish as gold, but we are seeing a reversal candle or reversal pattern, right? This candle here suggests indecision, and now if we have this candle here and engulf this one, if we can move by the end of this month, if we can close this market at over 1560, then that'll be a positive move for silver. And I mean, you never know if silver's broken a lot of trends, right? It broke through that trend, right? So there's your false breakout. You thought this market was going to go up, and then it came down, right? So here is the trend again. You draw this trend line again, right? And we finally broke through this trend line right here. Broke it, but fell right below it. Here we are, we broke this trend again. This trend is not broken, but you can always draw new trend lines, right? So there's the trend, it broke here again, came below it, and then it broke that trend again. Now it looks like we're trying to fight to get out of this trend here. This is what at least it looks like to me. I think once we can get above this 20-day moving average, this is what we need on the monthly chart. If silver wants to go higher, it needs to form this type of pattern here, which again broke through this long-term trend, right? That was a nice break. Right? There's another one. I mean, it's broken a lot of them. It just hasn't kept going higher, right? So there's your first trend. It breaks it right here, and then it falls below it. There's your second trend line here. It breaks it again. Now it's not below it, but it's looking for some sort of floor. You can see here that this is the level that we're this seems to be the level of support that we are testing. Okay, so this looks like the level that silver is trying to stay above, even though it looks like a big level. I mean, you know, this is a level on top of another level. This is the level here. This is another level here, right? And this is another level. So it's just a level on top of a level, so I just rather call that one giant level, right? But who knows, this smaller level can hold, right? But really, desperately, what silver needs is to go above this 20-day moving average. So I think once we see a move to the $20, $22 range, or to the $20 range, we can finally see this market start looking for finally balancing itself out. We can go above the 18-day moving average of highs and lows, come back down, retest that 20-day, that 18-day moving average of highs and lows, and continue to go higher. But again, on the monthly chart, that's what silver needs to do. It needs to break above this. Right now, we've been trading sideways here for quite some time, between here and $14, right? So we need to get out of this range. And I think if we can get out of this range, I think it'll be extremely positive for silver. But ultimately, this is the box that we need to get away from. So when price gets out of this box and stays out of this box, whether it's to the upside or the downside, I think we'll have a much better look at this market. Now, I can tell you that these levels here, you have to take these levels and you have to buy these levels, because this is a classic case of a trend reversal. All right, this might be, and you got to remember, it's getting very, very, very close if we're not there already. So anytime you have trading action, what you have is you have some downward move, then you have some sideways consolidation, and then you have the continuation. So here's the continuation to the downside. Here's your sideways consolidation. Here's the move to the downside. Now keep in mind that the moves to the downside are getting smaller and smaller, right? That's something to keep in mind, because whenever you're looking for a trend to change, that's what you're looking for. You're looking for the move to the downside, move sideways, then you want the move in the opposite direction. Now, sometimes it happens where you don't get that sideways trading. kind of like this, where you had the move up, but the move up was so big, the market came back down, and really the only sideways action you had was this right here. So that trend breaks, and here we are trading sideways since 2011 all the way to 2013. So for 2 years you trade sideways. 2013 to 2014, right here, trade sideways, and now from late 2014 to the current prices, now you have more sideways consolidation. Again, the moves to the downside are getting very, very, very small. And what you want to see is you want to see a break of this sideways consolidation, right? So here's the move down, sideways consolidation. If we break that, then you have an uptrend. That's not what happened. Here's the downtrend continuing. You broke this to the downside. Here's the downtrend continuing. Now you have more sideways action, right? So until we fall below the $14 range, this market is neutral or flat here on this monthly chart. And what we want to see is we want to see a move to the upside. You break this level here, the 1730, you close above this 1730 range here, and this is going to be the beginning of a bull market. But you have to pay attention to these because these are very important. This sideways action is extremely important for these metals. The FOMC is going to talk about rate hikes this month. I don't expect them to raise rates. I do expect them to raise them by the end of this year, but I don't expect them to raise them now. Okay? If you do raise interest rates, then you might see a little bit more of a move to the downside. Who knows? Maybe this market has established a flow. Now, for the last 6 or 7 rate hikes, gold and silver have not performed for the first 90 days. And then after the first 90 days, they perform and they continue their uptrend. So I'm not scared of these rate hikes. I think everything's already built in. You have to remember the Federal Reserve has been saying that they're going to raise rates for the last 5-6 years. So this is just the rate. I think one of the reasons why you've had such a big dip in the market or in the commodities market is really because the Federal Reserve continues to say that they're going to raise rates. That should support the dollar. But who knows at this point? There's a lot of chaos in this market, right? So we'll see on 16th. I think is on the 16th of this month they're going to announce it. But I don't believe they're going to raise it. Here's the Dow Jones. Here's your monthly chart. Very, very, very ugly chart here. Okay. Broke through this trend. It looks like it's finding some support here. All right. And this is what I've said about finding tops and finding bottoms. This is crucial. This level here is going to be extremely crucial here. Why? Because this is where it traded sideways for some time before the market decided to plummet. So there's going to be some sellers here, no doubt. But what we need to do is we need to establish a top. So if this is a top, any moves to the upside should be sold off. Any move to the upside. A break of this trend is extremely big, and we did break that trend. Now it's above the trend again, so it is very likely that the market is going to continue to go higher. Let me show this here. So this is what I wanted to show you, right? So they say that the Chinese market, that the reason for the Dow Jones sell-off is because of the Chinese market. We can clearly see within about 15 to 20 minutes, there's a Dow Jones selling off, right? Here's the Chinese market. This is the Dow Jones. This has nothing to do with China. This is really a coincidence if you ask me. Here's another look here. This pattern is clear. QE in action equals equities up. No QE, equities struggle. Here is the QE1 from 2009 all the way to 2010, right? So you had upward movement, QE1 ends, you have some sideways consolidation, QE2, market goes higher. Immediately after QE2 finish, we have a drop, we have a little bit of a move to the upside, and right here, we would have wanted to see what the market would have done without the QE, but this is exactly where they start. Now, this was the top of that trend, right? Here you see that there's a top in this trend, right? QE2 starts, there's a little bit of a sell-off. I could only assume that this sell-off would have continued had QE3 not started. So you have QE3. This was the longest QE up until 2014. And what happens, you have some sideways consolidation and immediately you start to drop. I can't really see this Dow Jones continuing to go higher. Home ownership rates. This is going back to 1965. We saw a peak back in 2002, 2003 with the housing bubble. Okay, now we are back to 1965 level, 63% U.S. home ownership rate. Okay, here's Caterpillar, world retail sales, right? These are the Great Recession, 19 months, right? Caterpillar is in the negative, right? Here's the recovery. Oh no, the recovery is here between 2013 and 2015. Here we are, 31 months of great recovery. And between 2011 and 2013, they just did phenomenal. But this is the recovery right here that everyone says that they were doing great. And you also have to keep in mind that copper is also a measure of how well the economy is doing. Copper is at an all-time low. Okay, so back to the charts here. This is a monthly chart. We are below the 18-day moving average of lows. What do we want to see? We want to see the move to the downside. We want to see the move back up, retest that 18-day moving average of highs and lows, and then ultimately continue to break break lows. That's what you want to see. If this is really going to continue to go higher, it's going to do it now, and it's probably going to go between, right now is at trading at 16,350. If this market is really going to be supported by nothing else than a great market, then this market should, in theory, continue to go higher and create new highs. This was really just a correctional phase, and I don't think so. I think what we're going to see is, let's look at the closer charts, right? I think what we're going to see is a lot more sideways consolidation. So here's your move to the upside. Here's your sideways consolidation here, all right, in this area here. And what I'm expecting is, I'm expecting for this trend to be over. I do expect a retest of this level here, and if we do create another high, I'm betting that it's just not going to go too much higher. I'm actually betting that it's not going to go higher than the previous high. I just don't see why it should. I don't see any support. The market is very illiquid right now. There has no liquidity. There's no volume in this market. So I don't see why this market will continue to go higher, but only time will tell. But again, this is a very interesting move to the upside, some serious sideways consolidation, and you have a big drop. So let's see what happens here in the next coming months, right? Those are long-term time frames, so I don't expect anything to happen in the next week or two, right? I'm pretty sure the rate announcement will also make this thing move in one direction or another. Okay. There's a daily chart. Again, really ugly chart. I would stay away from this market. Again, what are you risking? You're trying to get to 18.5, 19,000. Get out of the way and see. Just get out of the way and play it safe. That's what I would do. All right. That's about it, guys. I hope you guys enjoyed the video. I'll see you guys at the end of this week. Bye-bye.